turning back to the markets, which are higher across the board after back-to-back weekly wins for the Dow. It's a huge week of earnings with 1/3 of the S&P 500 companies reporting, including tech giants Amazon and Apple, plus a Fed decision on Wednesday and a jobs report on Friday. Here with more on how to position and what to watch is Lara Castleton, U.S. head of portfolio construction and strategy at Janus Henderson Investors. She's also a new face to CNBC. Welcome. Thank you for being here all the way from Colorado.
Yes, thank you for having me. It's lovely to be here.
So obviously a really big week. How much do you reconstruct your portfolio, or how much shifting do you do of positions during earnings season? And what do you make of what we've seen in Q1 so far?
It's a great question. We would always advise our clients to try to take that longer term approach. But this week is really the trifecta of what we've been watching for a long time. And so seeing what comes out of this week is going to take hold of which narrative is going to end up winning out over time. So first, if we start with earnings, we have said for a long time valuations are a little bit elevated. But if companies can continue to deliver on earnings, then those could be justified. And that's, I think, what you're seeing, the strength behind the market this week is that earnings are coming in broadly strong. So we're definitely focused on earnings. But one of the big decisions is the Fed on Wednesday. We don't anticipate them to cut. Market is not anticipating that, but it is the commentary that comes out of the Fed. Are they going to be a lot more hawkish? And are we going to see that 1 to 2 Fed cut eliminated completely for this year? So that will be something to watch. And then the biggest thing is jobs. Jobs have come in and surprised to the upside this year, and that has really bought the Fed some time in terms of not having to cut because of a growth stretch in the economy. So if jobs come in weaker, then that could be something to watch longer term as well.
So given all of those events and this very important week, would you say that this market is more macro-driven, as Morgan Stanley's analyst noted this morning, or do you think it still is very much a stock picker's market, fundamentally driven? Investors should really prioritize what's going on with earnings over some of the macro developments?
That's a great question. The macro environment is definitely driving the narrative. However, the way to succeed in this environment, we believe, is firmly on the fundamentals. So looking at companies that can do well if inflation continues to stick around like we're seeing, or if the Fed eliminates all rate cuts this year. We need companies that have good balance sheets and good fundamentals that can do well no matter what is going to come in the environment. So we firmly believe that fundamentals are one of the most crucial things to look at today.
It's not that you don't like tech, but two of the sectors that you do like are healthcare and utilities. These are not sexy sectors at all. Or they haven't been.
Utilities is not,
Utilities, energy. Mm-hmm. What did I say? Did I say
healthcare?
I said healthcare and utilities.
Yeah.
So tell me why you like those. And in healthcare particularly, I think I get utilities, okay? Mm-hmm. But in healthcare is a big sprawly thing. It can be pharma, it can be biotech, it can be the insurers, it can be medical device companies. Where in healthcare?
So we like...
Why unsexy and why where in healthcare?
So actually, the reason we like healthcare is because it can balance the defensive, but with some of the sexier stuff as well with biotech. And so people have abandoned healthcare because all they want is the AI trend. And so healthcare has broadly not done very well for a long time. But there's a couple of things going for it. One is just cheaper valuation. So back to fundamentals, it matters what you pay for things in this environment when rates are higher and inflation is higher. And it is broadly cheap as a sector. Now, the benefit of that is as well, if something were to happen and growth starts to slow, if the economy does turn over, as a sector broadly, it tends to be more defensive. But then it has this really exciting component of biotech. And if you're looking for innovation and sexiness, absolutely you get that with AI. But the amount of innovation happening within biotech or robotic surgery, there's a ton of growth opportunities within that subsector.
I agree with that. I think AI can be really transformative in healthcare.